Hi everyone, my name is Emily Powell and welcome back to another episode of the SGK Wealth Compass where financial insights are clearly explained. In this episode today, we always have John Steigerwald and Eric Randolph who's going to tell you what happened in the financial markets this week. Thank you so much and we hope you enjoy.
Good afternoon, everyone. My name is John Steigerwald. I'm CEO of SGK Wealth Advisors.
And I'm Eric Randolph, CFP and Portfolio Manager.
Eric, let's talk the exciting action going on here on weekend.
A lot of
markets, Thursday, Friday trading. It's been kind
lot
of crazy,
of news.
actually. Yeah. What are some of the catalysts for the sell-off we're seeing?
So we've actually seen significant sell-off happening recently, and a lot of it's actually in the tech sector. In fact, even more concentrated, if you will, even in the AI and AI tangent. Some of this may be caused by some news you probably heard earlier this week, which was Microsoft actually canceled the majority of their contracts or their licenses with Anthropic's Claude for their employees to use, possibly because, again, they need to actually spend a lot of their CapEx on compute and actually building out their compute capabilities. And so, again, we're starting to see some cracks actually in the AI story. On top of that, you also have Uber's COO that came out and said, you know what, in the first 3 months of the year, they blew through their budget for the whole year's worth of tokens. And they have to start taking a look and saying, you know what, we may have to curtail that and actually pull back spending. If that story starts to catch fire and you start seeing other institutions, other companies doing the same thing, again, we're beginning to see some cracks in the AI story.
Yeah, one of the catalysts was Broadcom's earnings that came out after the close on Wednesday.
That's right.
It was a pretty good earnings report, but the forecast was very conservative. So big sell-off the past 2 days in the semiconductor sector. Even NVIDIA was down hard today. Broadcom was down 12% Thursday, trading 6% again today. And it's not the least healthy thing going on. Coin is selling off hard this week. Maybe some capital is being raised ahead of the SpaceX IPO. But again, a speculative asset there in Bitcoin, not the worst thing. We're seeing a definite rotation. So it's not like the entire market is selling off. We're seeing strength in areas.
Yeah.
Like yesterday, healthcare stocks were up over 3%. We saw financials up close to 3%. Similarly today, when the NASDAQ is down over 800 points at the time of this filling, that's a significant drop in that index. I've seen stocks in our portfolio like Amgen, Stryker, McKesson, the healthcare, J&J up between 2 to 3%. Travelers kind of boring, great dividend payer.
This is almost like
stock up close to 3% today.
This is almost like the new flight to safety because, again, these are definitely safer names. We're actually starting to see.
And we want to see the market broaden out. Earnings have been strong in a lot of these areas, including healthcare, financials. But the market's been very narrow. I heard Liz Ann Saunders last week mention to the end of February, 60% of stocks in the S&P 500 had risen on a year-to-date basis. Since the war broke out in Iran,
only
15%, 75 of the 500 stocks in the S&P 500 were positive since that date. The rest of the market had declined. We want to see that broadening out. And this sell-off is not a bad news story in our view. It's a healthy pullback in certain areas. And traders are rotating into these more defensive areas of the market, which we like to see, actually. We had a lot of news out on the econ front. Why don't you hit some of that?
That we did. As you know, I like to begin with good news. And again, we got some of that today, as a matter of fact. So we got the jobs number for the month of May. So employers added 172,000 net new jobs during the month of May. This is the best month, 3-month stretch, actually, over the last 2 years.
It blew away expectations.
Unemployment actually held at about 4.3%. As you know, here in the U.S., if you're 5% or lower unemployment, that's considered full employment. So we absolutely have that. So where is it coming from? Leisure and hospitality made up over 70,000 of those jobs.
That's hotels, restaurants, bars.
Exactly. This is actually followed by healthcare and construction. I will talk a bit more about construction a little bit later on. But basically, what is the impact of all this? This actually puts a bit more pressure on the Fed. Okay, because why? This is all inflationary. And so at this point, there's less and less likelihood you're going to see the Fed have the capacity to go ahead and lower rates. If anything, the Fed futures are actually suggesting that before the end of the year, we're actually going to get a 25 basis point jump or raise in rates as opposed to necessarily falling. Now,
there's been a lot of headlines in the tech sector about layoffs and jobs.
Exactly. So I want to do a direct juxtaposition, okay, between the two. And here's the reason why. Often you've heard the saying before, okay, the future's already here. It's just not evenly distributed. Okay. So there's some sectors, honestly, that are already being impacted by AI. There's some sectors which will later be impacted by AI. And honestly, some sectors that are going to be somewhat immune no matter when we're talking about. Okay. But let's go ahead and focus on the information sector. Okay. What have we actually seen there? We've seen actually employment in the information sector has actually fell in May for the 16th time in the last 17 months. Companies like Meta and Microsoft have actually been cutting their headcount, right? Why? Because they mean to redirect some of the spending towards what? A lot of the CapEx that they have to do for AI. So again, you're seeing some jobs, that actually some job corrosion in favor of we need to actually do a lot of the spending.
It's like building a data centers too. That's why the construction numbers are so
There you
strong.
go.
Yeah.
You're singing to the choir here, right? So that's exactly what we've seen.
You don't want to hear me sing to the choir.
Data center construction actually in the month of April topped $50 billion for a single month. That's actually a record. And of course, what is that creating? AI investment is actually creating jobs in manufacturing and construction. So yeah, go ahead.
Well, one comment on the job sector. So the healthcare sector has been the strongest over the past 12 months. Job creation sector. Every month they add a lot of jobs. 85% of hires are women, and it's hospitals, skilled nurses, et cetera, where there's been shortages. So that is a real positive in terms of the...
And try to find a way to have AI replace their jobs.
AI bot is not going to replace a skilled nurse. Just saying.
No, I don't want an AI bot. I want
we had some data on the ISM figures.
So we actually got ISM manufacturing numbers came out. So it hit 54 in May. So ISM numbers, if it's 50 or above, it means expansion. If it's below 50, it means actual contraction. So we actually are good on both fronts. We're above 50 and we're actually moving further beyond 50. This is the 5th straight month of expansion and actually the fastest pace in 4 years. New orders actually surged to a 4-month high. As a matter of fact, again, rising energy costs from the conflict in the Middle East, of course, are pushing up material prices. Some of the strength, of course, is also, basically customers are, what are they doing? They're stockpiling their goods ahead of expectations as far as inflation is concerned. We get the numbers for the CPI and the PPI come out next week. So again, we'll have more on that story. And then beyond that, we have the service sector ISM. Why is that important? Because the U.S. is a service economy, okay? And so that has climbed to 54.5 during the month of May. That is a 3-month high. Input costs for businesses apparently also have hit the highest level since August of 2022. The only sectors actually that are shrinking right now are real estate and leasing.
Interesting.
Oddly enough. I know we got some news on the interest rate front also.
Well, we sure did. So rates have been on the rise, unfortunately. The U.S. 10-year cracked 4.5% Friday as we're filming this. So it's up 5 basis points.
Wrong direction.
Largely on the strength of the employment report today, but also, if you recall, last month's PCE indicator rose 3.8%. That's the Fed's preferred gauge of inflation. Their target is 2%, so definitely heading in the wrong direction. So it'll be Kevin Warsh's first meeting on June 16th and 17th of the Fed. He'll be as chair. It's be interesting to see what comes out of that. As you said, markets now pricing in a rate hike before year end. Same story in Europe. Inflation is ugly. They're highly dependent on energy imports there, and that's putting a lot of pressure on their economies, but also especially on the inflation front. So for May, their inflation figure came in at 3.2%. The European Central Bank meets on June 11th, and the expectation is they're going to have to raise rates to combat that. We had some interesting news on the company front this week.
We did not have earnings last week, but we still have news.
Yeah, but especially defense contractors, this is a great environment. We're seeing many of those up today, even though, again, the markets are down heavily. So a couple of stocks we're working on adding to client portfolios, won big contracts this week. So BAE Systems, which is a UK-based global conglomerate, they actually have manufacturing here in the U.S., interestingly enough, but they won a $992 million U.S. Defense Department contract for advanced precision-guided rockets, a sale to Qatar. There's been a lot of talk about European defense spending increasing, with NATO countries trying to hit that 3.5% of GDP target, whereas countries like Italy have been barely over 1% at times. So there's a big push on there, but there's a lot of spending going on in the Middle East given the conflict there.
Especially since the war.
Yeah,
Absolutely.
Countries like
Oman, Qatar,
UAE, Saudi Arabia, obviously.
Absolutely.
So on that front, Rheinmetall is a German defense company. They won a $1.18 billion contract with the German armed forces to supply military logistics of vehicles. So we like the prospects for those two additions to the portfolio. If I need a go-to for the weekly email, I just go to RTX.
RTX.
And what contracts did they win this week?
What did they win this time?
A lot of people know them as Raytheon.
Mm-hmm.
The aerospace sector has been on fire. So they make Pratt & Whitney engines. Boeing's increasing production, as is Airbus, to meet demand. That's good news for them. They make the Patriot missile systems. We know that's in huge demand, not only obviously in the Middle East with all those countries, but obviously Europe with how active Russia is. So they won a $515 million U.S. Navy contract to upgrade destroyers with an advanced radar system. So they make radar systems as well. I know you love to talk about Alphabet, so they were in the news again this week with a capital raise that I thought was a really, really smart move on their part. Why don't you talk about that, Eric?
I got to admit, love talking about Alphabet. So while everyone has been focused on the new IPOs, right, especially the big three, okay?
SpaceX, Anthropic, OpenAI.
OpenAI, okay? Guess what? Alphabet's management has actually been sharpening their pencils and thinking to themselves, okay, so let me get this straight. I think the expected market cap on those top three is supposed to be something in excess of $2.5 trillion.
Yes.
Okay? So if the public markets are willing to spend $2.5 trillion plus on companies that don't have earnings just yet, let's go ahead and provide them another alternative, shall we, okay? So we're talking about a company, okay, that does have positive earnings, okay, has a nice diversified palette of earnings. We're talking about search. We're talking about GPC, which is their cloud business, okay?
Like Azure or AWS.
Right, exactly, right? We're talking also about YouTube. YouTube has top line, right, of over $50 billion a year.
That's more than the GDP of most countries out there.
A whole bunch of it, exactly, okay? So how about this? If you're willing to spend $2.5 trillion on companies that actually don't have earnings yet, we're going to give you a safe alternative, okay? And this makes all the sense in the world. So they announced an $80 billion equity raise, okay? This includes $10 billion from Warren Buffett's company, Berkshire Hathaway. They can write very big checks, okay? Guess who is actually underwriting? We got Goldman Sachs and JP Morgan Chase. These are names, again, already in your portfolio. So, again, we're keeping it all in the family, so to speak, right?
Yeah, so, and by the way, Goldman will be the lead underwriter for the SpaceX launch next week. For Anthropic, it will be Goldman and JP Morgan, in fact, to SGK Core Holdings. So.
Yeah, so if you want to go ahead and invest some money in an AI company or an AI venture, you're also talking about a company that produces their own chips, which actually rival NVIDIA's. NVIDIA's got the CPUs, okay? Alphabet actually has the TPUs, okay? So again, you have a safe alternative that is actually already giving you ROIC, return on invested capital. Today, I could not think of a smarter move.
Yeah, they exceeded their expectations on the capital raise. Came in $5 billion better than expected. So that was good news
Hugely,
for Alphabet this week.
I think that about wraps it up for this session. We want to say thank you so much for spending some time with us. We hope you have a wonderful weekend. And as we say here at SGK, cheers.